That is a YouTube video everybody has to see. The Cats remix YouTube video. Maybe we can get that on our Facebook page because it's friggin' hilarious. Ryan Leopold back with us, and it is Monday, so we talk a little mortgage. And people are a little bit burnt out. I think a lot of buyers are burnt out, not just by the sun, but by the amount of houses that maybe they've put offers on and haven't been able to get, which can be frustrating. But there is still a lot of buyers who I think don't understand that the options exist. Ryan Leopold joins us from Cobalt Mortgage. Ryan, so, there's there's some misconceptions on what people need as far as down payments because of what people hear in the general world, I guess, outside of mortgage and real estate. What are some of those what are some of those issues that people are thinking? What are the misconceptions?
Yeah, I think, one of the biggest misconceptions is, like you said, that you have to have 20% down to buy a house. And I think a lot of that came from, and you realize it's been 5 years since the industry kind of went through what they call the mortgage crisis, which is crazy.
It is
5 years.
Yeah.
So I think a lot of that came from, there's always been misconception out there before that. But even after that, as programs changed, a lot of people feel that the guidelines got so tough that it's hard to buy a house. And probably one of the biggest barriers to entry was a down payment. So, there are tons of programs that are out there that you can go 0 down, 3% down, 5% down. There's a ton of options out there for people. I think it's just, if you're in that realm, if you're looking to buy a house and you don't really have a lot of money as a down payment, you have to talk to a lender, understand what options are available, and kind of see how each one of those options are fit for your situation, because everybody's going to be different.
Yeah, it seems that a lot of lenders, there are a lot of advertisements. You pick up the Homes and Land. I don't know if people have a Homes and Land. That magazine seems to have shrunk to 3 pages. But you'd pick it up and there'd be a lender in there and it would say 0 down this, 0 down this, or low down payment. It was always kind of, a lot of people would advertise to get to that. I would call it just the people who are probably the least qualified to purchase, or maybe have the least amount of down payment, the lowest credit scores. But those programs actually do still exist, even though maybe people aren't seeing them advertised as much.
Yeah, I'd say for starters that a lot of the 0 down loan programs, or really low down, I think are more of a marketing tool than anything else. So once you get into the details, it may not be the best situation for everybody. But, like I said, it's a marketing idea in a lot of cases. But there are some programs out there that do work if someone has to come in with 0 to nothing down. Absolutely.
So let's talk a little bit about the low down payment options. What are the most common ones?
So I'd say the most common are going to be FHA, which is 3.5% down, and then conventional you can go as low as 5.5% down. So I think there's one of the biggest misconceptions is understanding why someone falls into an FHA loan versus conventional, and that FHA is not necessarily stand for first time home buyer. It's Federal Housing Association. Close enough.
Yeah, close.
But a lot of people believe it's for first-time home buyers, okay?
Right.
So I think that there's positives and negatives to both. FHA is great for some people, but not for everybody, okay? And then you can go to 0 down programs like VA is really great. As long as you have a VA certificate, you can do 0 down for that. And then USDA is rural housing, where you can do 0 down on that as well if you're willing to live kind of in the rural areas.
I call it the country.
The country, where those loans are prevalent.
Yeah. It's always curious to figure out why people go out, why people don't think things are available. And I think that's almost like a barrier to entry for a lot of potential home buyers, is they're afraid they're going to get denied. And it's a scary thing. When people go through the process for the very first time, it is scary. And to think, well, I don't know how much money can I part with? How much money am I going to need to keep in my account? What is my credit with people, for a lot of people who've never checked it? Yeah. You go through all of these different aspects of a person's financial life, and you kind of lay it on the line and hope somebody's going to give you the answer you want.
Yeah, I think at the end of the day, there's 2 main things that, especially for first-time home buyers, that they need to understand. When it comes to the mortgage side of things, I don't think they're necessarily that much tougher than they used to be. I think the process to get a loan just makes a lot more sense these days. So there's always 3 things that lenders always look for. It's going to be your strength in credit, your job history and how much money you make, and then how much money you have saved up, and how much of the money you have saved up you want to use as a down payment. And so your strength in those 3 categories will determine programs and interest rates available. And then on the other side, what buyers really want to know is how much house can I buy, how much are my payments going to be, and how much is it going to be out of pocket. So when it comes to low down or no down programs, it's about how do you fit into those categories, and of the programs available, are they really the best thing for you moving forward, looking to buy a home for you and your family? And that's really what our job on the lending side is, to kind of decipher. Let us know what your situation is, and then our job is to educate you on your options, and then to work together to figure out an option that's best for you.
And when you start looking at some of these options, I know some of the other ones that you had talked about are these 3% down, whether it's a My Community loan or a Home Path. And so you end up with, there are viable programs, even if you don't have 5, 10, 20% down, that are extremely affordable.
Yeah, so you can go FHA 3.5%. You have conventional, a minimum of 5% down. My Community is 3% down. Home Path allows you to do 3% down with no mortgage insurance, which could be a really good thing. And a lot of times you can do rehab loans on those properties as well, where you could actually borrow some of the equity in the property, or lend into the value of the property and use some of that to fix the house up a little bit. And then when it comes to some state programs, they got House Key and Home Advantage that allows people to actually not get a gift for the down payment, but basically have a second mortgage be added onto the loan, but use money like state money as a down payment to help you get into a property with, again, with nothing down.
We're here with Ryan Leopold of Cobalt Mortgage. Ryan, so when people come and they're thinking these are one of the programs they want, what are some of the biggest questions they should be asking themselves to determine if those programs are right for them?
I think, like I said before, I think it starts with understanding their situation. Okay, if they have money and they have good credit and they have stable employment, it's about looking at, okay, granted, there's going to be zero down loan programs out there, but what are the terms and conditions of the financing? Okay, what is my interest rate on Home Advantage compared to doing 3% down My Community? Where's the positives and negatives to those two options? Because I have the 3% down. I don't want to use it, but I will if I have to. So if you get in there and say, this is what the interest rates are, here are the costs, and here are your payments. If you just put 3% down as opposed to zero, let's look at those to see if it's worth it or not. I mean, and also see if you qualify for the program.
There's some pretty big comparison pieces that need to go on from a financial standpoint. Really look at the numbers.
I think with anything, you pay for it one way or another. Okay, so if you take Home Advantage, for example, that you have to use basically the designated interest rates and programs that are designed on the website. They're specific to the website. And in some cases, those interest rates can be 1/4 to 0.5% above market rates, which are still really good, but it's going to be a lot higher than if you just put 3% down and got today's market rates with mortgage insurance. So there's always going to be the combination of two, where one program is not always right for everyone. And again, that's what a good lender's job is, to sit down and understand their unique position and lay out the options and kind of decipher what is the positives and negatives with each one, and what's right for their situation.
Do you find that a lot of people will be drawn to the zero down programs because of the sexiness of them?
I think that...
I don't know why zero down's sexy, but
I'm trying to figure out how to answer that one. I think the idea of buying a home with nothing out of pocket is appealing to a lot of people.
There's a better word.
Is that better?
Sure.
And I think it's an easy way to market to get the phone to ring. So let's be transparent with what a lot of these programs are designed for. So at the end of the day, yeah, I mean, sometimes it's worth it. Sometimes it's the right thing. Sometimes people have other obligations where they just don't have the down payment, but they have perfect credit and make great income. So I think, yes, it's a way to get interest out there, and sometimes it's a great fit. Sometimes it makes sense to put a little bit more money down because just the terms and conditions just can be better.
Yeah,
certainly. It's whatever is that best combination of everything.
Well, and when, as you said, you're going to pay for it somewhere, and a lot of the low down payment programs have slightly higher interest rates, or or if you're able to put more down, you get lower interest rate,
or they're just limiting on areas you can buy like rural housing, limiting on eligibility like VA, or limited on income like Home Advantage.
Yeah.
So it's a little bit different for everybody.
You got to fit into a smaller box to get some of those.
Very true.
No matter how sexy, you can't always fit into the box.
Very true.
Ryan, thanks so much for joining us. Ryan Leopold with Cobalt Mortgage. Ryan talked a little bit about renovation. And, renovating a home to make the house you want is something that a lot of people choose to do, especially if the house isn't exactly their dream home when they buy it. Charlie Carter is going to join us next, talking a little bit about renovating a home. We'll be right back after this break.
Bye.